Manish Sonthalia, VP and Fund Manager at Motilal Oswal Asset Management PMS, joins us right now on the show. Manish, good having you. And after a while, thanks so much for taking the time out. This is Neeraj here. Good afternoon. What are you making of some of the moves that we're seeing in the markets today? I mean, for yesterday when all the defensives were up and about, in today's session, HUL on that royalty news or ITC on the rebalancing news, some of the defensives are giving way today.
Yeah, I mean, if you look at the defensives or FMCG stocks which have been correcting, it is on the back of some specific developments on those companies. But overall, I think the weakness in the markets is more a function of waning institutional participation as we approach the end of the calendar year. But at the same time, Ben Bernanke buying $40 billion worth of mortgage bonds implies that more risk money is going to come to emerging markets. So on an overall basis, I think maybe it's a time, the markets are just about consolidating and beginning the early next year. We could just see the markets actually move up significantly higher from what they are currently.
Are you buying into your funds right now, Manish? And if so, before we talk about it in great detail, what is it? Just give us a broad brush of what is it that you like and would likely add should you have funds?
We of late have been liking pharmaceutical sector, the banking sector, or let's say the cement sector, or your FMCG that we have been holding and have been buying into specific names of late. I think some of the changes that we have made is that we have applied in the PCG IPO, PC Jewelers IPO. I think that one offered a good valuation comfort, and the growth in the company was quite good, and the overall jewelry market seems to be expanding at around 12 to 15% every year. And it's a shift from the unorganized to the organized market. So I think on that basis, we thought that PC Jewelers was a good buy, and we have applied in the IPO.
So is that theme as well something that you like, Manish? Not just jewelry per se. I mean, those stocks have done very well, the likes of TBZ. And it's surprising because the issue barely managed to go through. It languished for a while, and suddenly it went up as if there was no tomorrow. That, retail, I mean, are these themes that you guys are liking, that you guys are adding on to?
Yeah, there's no doing away with the fact that, bulk of your portfolio, whether it be, one's own portfolio or the PMS portfolio, around 55 to 60% would still comprise of consumer names. I agree that some of the names are highly valued at this given point in time, but maybe you'll have to forego your returns for the next 1 year or so on those high quality names, but so be it. It's better than buying into broken balance sheet companies, etc. So at the same time, these are good from a balance sheet point of view, and there will come a time where you'll need to do some sector rotation based on the quality of the companies that you're looking at. But at this given point in time, I think consumer is where we remain focused. We endeavor to increase our weightage on banking to some extent, and pharmaceutical remains a sweet spot in the portfolio, and cement is one area we think will do well over the next 2 to 3 years.
Manish, you were talking about subscription in the PCJ IPO. What about Bharti Infratel, and subsequently a word on Bharti Airtel as well? I know you track it at the back of your hand. If you can probably talk about that too.
I'm not particularly enthused with the Bharti Infratel IPO, Neeraj. I believe, it is true that it's a long-term story, and it's a play on the tenancy ratio going to international levels, which is, currently at about 1.7 times. And the amount of churn in the handsets now giving way to, the 2G handsets giving way to smartphone handsets means that data is going to pick up. But it's going to happen only over a period of time, and maybe, you only going to see data penetration happening very, very gradually. So it's a play on the data traffic carried by these towers as we move into the next 3, 5, 10 years. But at this given point in time, a single digit ROE, does not enthuse too much, and maybe it's a play only for the institutional investors who can take a 5 to 10 year call on these, concept stocks, so to speak, at this given point in time. But that's about it. So, I'm not really too enthused by the Infratel IPO. And as far as Bharti is concerned, it remains to be seen how tariffs going to increase. We have seen everything. We have seen the spectrum, failing at the auction, and then there was a revision of the spectrum prices on the downside. But even now, there seem to be no takers for 50% of the circles. So the cost side is getting rationalized, that's for sure. But how are the tariffs going to move? You need the tariffs to move up. Unless and until you have some sort of, agreement between the so many players that you have, that, tariffs should go up, you're really not seeing too much of an increase in margins, and at the same time, voice penetration is just about quite strong in the metros. So I don't really see too many triggers for the telecom sector per se at this current point in time.
A view on Tata Motors?
I think the numbers are very encouraging. The retail sales growing by 14% on a YOY basis and 19% on a month-on-month basis. Added to that, you have very good sales numbers coming out of the Land Rover Range Rover before a new model is being launched, and we believe that there is a waiting period of 4 months for the new models. They already have bookings of around 7,500 odd vehicles. So China is clicking for them in a big way, and the UK home market is doing quite well. And on top of this, the XF range of Jaguar vehicles are also selling quite well. So I think overall numbers are being maintained, for fiscal 2013 and 14 at around 3,60,000 for FY13. Given the fact that CV cycle is about to turn in FY14, and you'll see, you have all these comments coming from all the CV players, whether it be Ashok Leyland or Eicher Motors. It's expected that CV cycle is expected to come back in a big way in FY14. So valuations remain extremely cheap. So from that point of view, I think it is a good buy at the current levels.
So Manish, if you are at a liberty, maybe not make a pure play recommendation, but maybe a mid-cap stock or something in the mid-cap space that you are reasonably bullish on from a 6-month to a 12-month perspective.
Yeah, so Eicher Motors is one name we are quite bullish on in this in the auto space, and we think that the engine story for the mid-range vehicles on the Volvo platform is the one game changer for this company going forward. Coupled with that, the Royal Enfield motorcycle business is doing quite well. So I think this is one name which excites us quite a bit. Valuations are inexpensive, so from a 6 to 12 months perspective, this is one name which looks quite good. We have it in our portfolio. We're reasonably confident that the stock should do well.
What's your view on oil and gas right now, Manish, especially for a stock like Reliance Industries, which has been a ranked underperformer?
Yeah, so the near-term play on Reliance Industries is more to do with what's going to happen to refining margins, and refining margins on the Singapore GRMs are quite low. But I think they would do closer to around $9 per barrel vis-a-vis $10 per barrel that we have seen in the last quarter. And this is due to the difference in the light and heavy crude distillates that they have. But apart from this, there are no near-term triggers. Anything on the 4G front could be positive for this company. I think the stock price is getting support because of the buyback plan which they have. But again, that's approaching the high end. They have limit of around 8 rupees, 850 as the maximum buying price for that stock. So I think no action zone for Reliance at this given point in time.